Good morning, welcome to a Friday's live trading. Now I've done a bit of an unusual thing here. I've taken a bit of an earlier trade on this non-farm payrolls day, but we'll see how this runs out. I'm just looking at, I quite like the euro. It's broken the upper side here, this wedge that's sort of sitting there, just looking to trade it back towards the R1 at this stage. So trade is we've just literally gone long. We've only got a 15 pip stop on this, but we'll just see if it plays out here. It's a little bit around its prior highs here, so this resistance may just hold it off, but it's tapping in the right direction. We'll see how it runs. Doing this. Oh, so okay, so just back from the school run here. I've just literally got back and target hit on this euro. Now I could have looked for more, but I'm just playing a pure statistical trade here back to its R1. It has got a monthly pivot that sits up there just above where price is at the moment, and it's into its monthly R2, which may give us a bit of resistance. We don't see these monthly pivots broken too frequently, although it is, of course, it's a bit of a different case in this current situation. We're seeing markets move a little bit different. If I just show you this a little bit more detail, this monthly pivot, if I can. That's it. So we put all the monthly pivots in here, and you can see historically, yep, last month it pitched below its S2s, but the general sort of price action is between the sort of R1s and S1s for many a month. So sort of hitting the S2s is well, it seems to be proved me wrong a little bit as I skip back here, but I know statistically over long periods, even where it's sort of moving here on these dailies, you're seeing for month after month of it staying within range. So there's logic to coming out here. Now, as I say, it's an abnormal month with the what's going on, and we could see the euro pushing higher, but as an intraday trade, that was the target, the R1. Statistically, again, they tend to hold things in a little bit, although again, more recently we've seen some reasons for push of those limits, but statistically we're still confined. 80% of the trading is between its R1 and S1. So that's it for this morning in terms of trading. I won't be trying to look for anything else. We've got non-farms out later. I'm going to pause this recording and catch you nearly around about 1:15 for that. So okay, so there's around about 15 minutes or so until we get non-farm payrolls. Euro's had a further push up this morning, and well, it's pushing back up again as I speak. Quite an unusual price action for the euro or any of these currencies on a non-farm payrolls. We often get sort of maybe an instant movement in the morning and then just consolidation throughout, and because the numbers are so important. One thing to bear in mind at the moment is the numbers are less important, because realistically, whether these come in good or bad, well, if they come in bad, I think that you'll see the euro just push up, and the dollar effectively sold off against most things this afternoon. We don't forget we do have the non-farms, but we also have the Canadian data out there as well. So if you're looking at the Canadian stroke US dollar, you might get a double whammy somewhere along that line. So just be wary of that. But so what we got then, as I say, I think that if we get some bad figures, I think we'll see sort of as I say, further softening of the dollar. But good figures aren't necessarily going to do any good, because interest rates have been cut. So we've seen those cut. We've got more cuts priced in. In fact, there may be 3 or 4 more cuts. I mean, it may be coming down towards the zero mark, or 0.25% or whatever. Again, at some point. And it's been priced in, and it's being priced in this year. We've already seen some numbers this morning. We were looking at numbers earlier on. Let me just see if I can bring that in to play here. Let's just look at the countdown to the FOMC. Let's just look at the current where we're sitting here, and it's there's another 0.5% expectation of cut later this month, and then as we go through the months here, that would take it down to you've got the potentials of it coming right the way down to 0.25% in April. Now in June, what's it expected to come through at? Still same sort of odds then. So the thing is, everything that's happening here, I've said it in the trading room before, and I'll say it again, is cutting interest rates isn't going to solve the problem of coronavirus, because the problem is that will affect the likes of the US, its supply chain. And the supply chains, I mean, the likes of Apple have mentioned it. I actually know someone that works or know somebody that works for Apple and in the UK, and their supply chains are really thin at the moment. They had large stocks normally, but those large stocks are gradually, very gradually, very quickly being eroded, and so it's going to have a knock-on effect everywhere. So it is supply is the big problem in the US at the moment, or potential, and that's not going to be solved cutting interest rates necessarily. It might give people the ability to borrow money or whatever, but it's not going to do what it needs to do to get these supply chains rolling. Only hopefully if China can get back into production fully and start and getting the stuff to the US what's needed, and other countries where they're buying these things. So that is the biggest problem facing the US, I think, at the moment, is the supply chains. All what we're going to see here this afternoon with the jobs report, we saw about a 20 pip move last time. I wouldn't be surprised if we saw more of the same, or we just well, we'll see. I'm not going to double guess which way this euro is going to go. We used to get good price action. I don't think we're going to get a lot at all, but we'll see. Normal focus on this news would be on the average earnings. Is the key thing at the moment. We're looking, if you were looking to do too much, would be the average earnings, but there will of course be some focus on the new jobs themselves. So the employment change, effectively, as it's put, there will be quite a bit of focus maybe looking at that normally, but we've been looking at the inflation aspects of it for some time. Now it may be looking at employment change, but don't forget these are lagging indicators, so we're not going to see employment, for example, cut for some time. We're not going to see anything change here too much on the employment data that's brought around by the coronavirus until we see a lack of goods going into the US. So this is where we're thinking in terms of trading this news today. I mean, I talk about this each time, but there's different ways we can trade it. I personally like to wait until the news is a bit done and dusted and see if we can get onto a move. Some people will straddle the price, etc. The thing is, it's not going very well, and it hasn't been going for a long time in terms of straddling price. All that is just putting a buy order 20 pips or so above price, 20 pips below, and hoping that it's going to sort of run into one of those straddles and take effect. But that's not worked for a long time, I don't think. Other sort of moves is really just looking at the sort of quicker trades we could possibly do, and that's just again, but still waiting for 5-10 minutes after the news to see what's happened. Let the first buy come. If you get an inside buy, you could then sort of trade either side, whichever way it goes. That buy, a lot of traders will be looking at that sort of thing. And waiting for it to break, and then just trade with the break. So effectively, that's the same as a price action like this running. So the price is let's say pushes up, for example, pulls back, retraces on the sell point, and then it's just a case of breaking, looking for the break. So there's a few ways we can do it. You need to have a bit of patience for all these things. Some people would obviously try and buy down here on the pullback here, but the risk of course of doing that is it just keeps on going. So I shall have patience. I may look to see if we get anything that gives us a move, a pullback, and then see if we can get into the original move direction. We'll see what happens this afternoon. But as I say, it's 12 minutes to go until the news actually comes out. I'm going to sit here and wait patiently now. Okay, so the data's just come out here, and well, you can see by this tiny little bar here that there's barely any reaction to it as expected. So I'm not going to try and even do anything regarding this this news. I'm just looking at the data that's come out. Average earnings, it's 0.3 versus 0.3 year on year, 3% but versus all flat there anyway. The numbers came in significantly better than expected, 273 versus 175. It's showing that people are still employing, but at this stage, as I said, they're too lagging to have a great deal. Interest rates ain't going to be increased on this basis, so it's not going to strengthen the dollar. They're not going to be. They're going to be decreased potentially, but that's already out there. So it's a no change non-farms for me. So on that basis, I'm probably not going to take another trade this afternoon, and we'll stick with what I did this morning. So a net 27 pips on that, I believe it was. So I've let this run for a little while. There's certainly no trade setting up on the euro any which way. Generally by this stage we'd have seen a decent move, but as I said, with the non-farms become quite irrelevant. They've been only given about 20 pip moves over the last I think last month we only had about a 20 pip move, and it pretty much sums up when you're in a certain point in the market that you're just not going to get such volatility from it. So as I said, I prefer to wait until after the news has come out and have a look at the trading, some of the reaction to it, rather than try and get caught up in the news itself. But there's nothing to be done here, and we've taken, as I said, 27 pips out this morning. I should leave it as it is. So I'm going to call it a day on this recording. Quite a short one. Sorry I didn't go into massive detail. There wasn't a lot of detail to go in. This morning was quite a simple trade. Just pushing the euro back towards its daily R1. Went right the way through that in the end, and that in itself signalled to me, okay, the R1 had the statistical level there. It did stall at that sort of level, into that daily R1 level. The very fact that it continued pushing out afterwards, it suggested the market's ignoring any of these sort of key numbers coming out, or I say any, but this particular key number, because they're more concerned with something else, and it's something which cannot be controlled, which makes it more difficult for people to know what to do. So money goes generally to safety, but the dollar certainly is getting quite a kick in here. Right, so I'm going to end it here. If you're interested in joining us, we do have occasionally a couple of days free, a couple of days that we do live trading free. But you can also join us now on. We have a monthly subscription, because people have said, well, actually, I just want to join your room. Now we would like you to have the content, the trading content, but we realise that some people, they really want to just join us for coming into our trading room. So that can be done. You will still get some content. It's done on a monthly basis. So you would still get the course sent to you over on a monthly basis. So if that appeals to you, do have a look. I'll put a link on the bottom of this video, and actually there'll be a card at the top that you can click on, which will take you to that particular page. I wish you a great weekend, and I will be with you next Friday. Bye for now.